Hey Fools, I'm David Hansen. Today joined by Motley Fool contributor Jordan Wathen. Jordan, we're talking the BDC industry, and I wanted to get your take on a couple of the BDCs that are involved in the startup world. Obviously, startups, IPOs have been a hot topic over the last year and a half. Valuations crazy to some people. You may be one of those people who thinks it. In particular, the startups that I wanted to talk about were Box and Dropbox. So I'm not a technology guru here, but basically file transfer services that are on the web have fetched reported billion-dollar valuations, very expensive to some people. And there are some BDCs, some venture capital-based BDCs behind these companies. Who are they, and what does Dropbox and Box mean to these BDCs?
So first you have, for Box, we'll start with Box first, because they're the ones who filed for an SEC filing to go IPO.
Which they then took off the table.
Which they, right.
The appetite maybe wasn't as hot as they thought.
Yeah, NASDAQ. So Box is, we'll start this way. Hercules Technology Growth Capital is the company behind Box. And they obviously aren't funding the full thing, but about 4% of its net asset value is attributed to Box.
So Hercules net asset value, 4% of that is tied up in Box.
Right.
Okay.
And then with GSV Capital, they're the ones behind Dropbox, and 8.7% of GSV Capital's NAV is tied up in Dropbox.
So even more significant here.
Right. It's even more significant to GSV, and probably even more so because they're buying back stock now. So that percentage is going up. And
we should say GSV also heavily involved in Twitter. That makes up a large part of their NAV. So they have had some big successes in some of their early investments there.
Right. But this one might not pan out so well. So first of all, Box and Dropbox.
Yeah, it's
confusing enough. They have both. They're basically showing signs they're unprofitable. Box obviously is unprofitable. We know that. They're losing more than $1 at the bottom line for each dollar they've taken in revenue, which is kind of concerning. And then Dropbox is still raising private capital, even though they're thinking about going IPO, which says, hey, maybe not. We need some more money until we get there.
Right.
So for these two BDCs, you really have to think, if they can't get an exit with IPO, what's going to happen? Because they definitely don't want to sit there and hold unprofitable companies.
Right.
And private investors aren't going to want to throw money into it forever.
Right.
So where's the exit strategy?
Well, as a shareholder of one of these companies, if you're trying to put a value on their net asset value, kind of your own valuation, do you discount what they have it put at it as their books, or how do you weigh the potential upside if these do work out and these do IPO and are a multiple of their current valuation years down the line?
Right. I mean, personally, I think I would have to discount it right now. When someone steps up to say, I'm going IPO, and then they don't go public, I think it's a little troublesome. Yeah, it's more than a red flag, I would say. And you have to think, too, is when you think about companies like this isn't your typical asset-heavy company. These have, the only assets they might have, servers, whatever.
Right.
It's stuff that's losing value by the day. So it's not one of those issues where, we can go take our collateral back. So that's one thing that you have to consider when you're talking about tech BDCs and tech investments in general, especially from a lender's perspective, is that your collateral and your losses, should you lose on a loan, are going to be fairly significant.
Right. So maybe looking at NAVs of these companies these BDCs that focus on kind of the VC world, maybe try to understand the story behind the valuation that they're saying what it's worth, and so you kind of make your own judgment in terms of what their NAV could potentially look like.
Yeah, I couldn't disagree with that. I think they need a little more scrutiny than your average BDC or private investor.
All right, that's fair. All right, for Jordan Wathen, I'm David Hansen. Fool on.